Hey, welcome to my daily channel. Today we're going to go over Adyen and show you some challenges that I've got with their financial statements. Today I'm going to go over that and give you guys an insight into what I'm looking for. Gold Lynch channel is uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm sharing what I learned along the way. This is my investing process. So I've already covered and shown you where I've came across Adyen in another video. I've already done the 5-minute check. So now I've been doing my homework on it. I've kind of come across a bit of a challenge. So we're going to cover that today. These are the guys I learned off. They did pretty well for themselves over just a little while. By following the breadcrumbs they've left behind, we should be able to follow in their footsteps. If you'd like the investing resources that I had when I first started, you can check them out. Link in the description. It's free. It's my gift to you guys. Otherwise, let's get into it. Adyen. I'm in a bit of a focus on the payments industry so that I can try and batch while I'm thinking all about all the different aspects of those businesses and the industry, try and understand them all at once. So I've been looking through Adyen and I've been coming across a bit of a challenge in terms of the cash flow from operations and income before taxes. 1.2 billion. And then they're getting cash generated from operations, 1.6. Huh? How have they got more money than their income? And it shows up in some other places. So if we go back to their 2021 report, so going back 5 years, we see the same issue. So they're making $323 million, yet they had net cash flows from operating activities of 1 billion. So I needed to go hunting across these reports. And so why? So I'm trying to work out what the free cash flow of the business is. And if you've been with me previously in other videos, what I do is I'm looking at the last 5 years and I want to try and understand what the growth rate is. So we've got our revenues. They've been growing pretty consistently. Net income has been growing consistently. Cash from operations, it's all over the shop. It's decreasing if anything. And yeah, like we've got figures here, cash from operations, which is higher than our net income. So something is up and we need to go digging for it. Now, CapEx and maintenance, I've had to go in and pull these figures together based on the financial statements. Now I'm going to do the same for our cash from operations, because once I've got this sorted and cleaned up across a 5-year period, I can then work out what our owner's cash is and what the rate of increase is going to be there. Now I'm not going to go through every report today and figure that out. I'm going to show you how I've come across it and how I'm trying to work out and solve this so that you guys, if you guys come across it for yourselves, you can have a go at it as well. So let's go back to where this bigger difference is here. So where they made 469 million, but they had cash from operations of 1.8 billion. Here we are. 580, 1.8 net cash flows from operating activities. So here we go. This is the issue that we've got. Now, just while I'm here, purchases of plant and equipment and then capitalization of intangible assets. So that's what I've utilized for our maintenance and CapEx cost. I've totaled these together. Some online calculators and things like that, and things like Google, or if you're looking on Morningstar and things like that, they'll pretty much just look at plant equipment. But sometimes these figures here are significant. So it's important to package that all up. All right. Now, where is this figure diverging from reality? And the main point here is they're adding $1 billion on here. So it's going to be important to have a closer look through some of these figures. We've got receivables from merchants. So we've got to look at these two and this one. So payables to merchants and financial institutions, note 16. So as boring as it is, we need to go and hunt for our in the notes to financial statements. And we want to have a sticky beak for what this stuff means. So did they actually get $1 billion? Or is there other stuff going on? So we can see that for 15, trade, other receivables from merchants. Trade receivables are amounts due from merchants for payment services performed. If collection is expected in less than 1 year, they are classified as current assets. Trade and other receivables are classified as amortized costs, initially recognized as fair value and subsequently measured at amortized costs. Less impairments for expected credit losses. The average duration of the receivables varies depending on their nature. Due to the short duration of all the receivables, the fair value approximates the carrying value. All right, so we've got trade and trade receivables, receivables from merchants and financial institutions, the balance. Trade and other these receivables are held with merchants that have not subtracted from settlement. So you can see that these are some pretty significant sums of money. And then it breaks down those in here and here. So this is where I'm going to need to keep digging to sort out that figure. Now, 16. This is where it was pretty significant. And we can see it's not broken down nice and neatly for us. It's actually the difference between the years. So where it's gone $1 billion, we can see that that's because of the difference here. The total from year to year has increased. It's kind of like the net cash they've actually had to increase there. So 2.5 up to 3.6. And so as this position is kind of increasing, that means that we're going to have that issue on our cash flow statement, and I'm going to have to clean it up. So payables are obligations initially recognized at fair value and subsequently measured at amortized cost to pay for goods or services that have been acquired due to short-term carrying. But here's where it gets interesting. So the payables to merchants and financial institutions relate to interchange and scheme fees payable and do not constitute borrowings. The payables to merchants include the merchant potential liability reserve as part of Adyen's NPL risk mitigation. So when Adyen acts as an acquirer, that's part of the bank business, or in terms of a payments, it's a person in that link. It is liable to settle eligible chargebacks with card networks. To cover for this inherent risk, Adyen withholds funds from the payouts to merchants, estimated as the amount of transaction volume for which issuers could potentially submit a chargeback, and Adyen has to take financial responsibility. These NPL risks or reserves amounted to €471,000 as per that. Taxes, is that in? Yep, it just is. That taxes and social security, blah, 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 blah. All right. So this figure here, I've got to now make a decision based on that sum there doesn't constitute that whole amount. So $1 billion difference. Now, I do need to go through pretty much line by line and check these out, because for this business, looking at it in terms of free cash flow, this is messing it up. This isn't money that the business gets to keep. It's money that flows in, and then it needs to chill out there over time. Part of these is part of maintaining, its business's float. So inherently, it's inflated the free cash flow over a number of years. But I want to find out what the true underlying free cash flow is. What's this actual business able to spend? And some of this money here the business definitely isn't able to spend to grow the business or give it to the owners of the company, either by future dividends or buying back shares and things like that. Think of it as kind of like it's restricted cash that comes in. It's got a specific purpose and the business can't do anything with it. So I'm going to need to go through every year of these annual reports and dig through this data and then come back to my sheet and adjust what this cash from operations actually is, so that it's kind of normalized to what the business is actually bringing in cash wise. Now that could be pretty basic. That might just be me going, I'm just going to delete that whole line item off. But that's probably not going to be the most accurate way to do it. So I do want to take my time and go through it. But I just wanted to do this video to show you guys some of the challenges that you can come across. So not all financial statements are equal. Just looking at them on, just a couple of metrics and taking it on face value is definitely not the right thing to do. That's why, as investors, we want to get paid the big bucks. And so it doesn't take too much effort. It's not difficult to understand, but it takes a little bit of mental work to come and do it. So that's where the gap is between market, understanding, and just literally going out and having a bit more understanding than the average Joe in the marketplace. So I'll be reviewing this business a bit further over the coming days, as well as some other payments ones. I've just done Visa and MasterCard earlier. So if you guys are interested in that, subscribe to come along. Otherwise, like you can see here, free cash flow to sales is 176%. It's like, how does that work? So that's why we need to go through and clean this up, because I want to know if this business is growing its cash flow at these kind of rates, because that would be sick and an awesome business to own. And it might not be clear to the majority of other investors. So that means that we can potentially jump on at a discount to its value. All right, that's all for today. I'm going to let you guys get back to it. Otherwise, check out this next video because YouTube thinks you'll like it. Cheers.